Hey guys, it's Rahim. Welcome back to the channel. If you're new to the channel, smash the subscribe button because I talk about property investment, personal development, and how to gain financial freedom. We've done a little research on my channel. We've realized 51% of the people that are watching my videos have not hit that subscribe button. So if you're one of those, I kindly ask you to please, before you continue, hit that subscribe button now. And whilst you're there, hit the like button so that the algorithm will push the video to wider and wider audience. In this video, I'm going to share with you 6 reasons why it is important to buy and rent houses. You see, in order for you to become financially free or financially independent, it's important for you to buy appreciating assets, something that would make money for you whilst you're doing whatever you want to do, or perhaps maybe become a vehicle to allow you to quit working if you really don't like working for people. So in this video, that's exactly what I'm going to share with you. The reason why, 6 reasons why you should buy houses instead of living in them, start renting them. So let's get to it. So the first reason why you really want to buy properties, investment properties, is a steady income. You see, once you've bought a property for an investment purpose, you rent that property up, that property will be bringing you income. So how does it bring you income? It brings you income by renting it to an individual, to a family, or to a group of people. So the group of people will pay you the rent and you take out all your expenses and then you make a little bit of income from it. So it could give you that recurring income. You may be thinking, how much would a normal buy-to-let give you on a monthly recurring income? In average, a normal buy-to-let property, I'm talking about properties in the North, South Wales, and somewhere around the UK. In average, those properties generate you between £300 to £600 per calendar month. It could be a 3-bedroom house, 4-bedroom house. It could be a HMO properties, house in multiple occupation. It gives you that steady recurring income. So again, when it comes to any of these deductions, you don't have to do it physically. It happens automatically, because what would have happened? You would have set up a direct debit to pay whatever bills that comes for your investment property. And secondly, you would have also get the estate agency who manages your property to actually pay you the money automatically without you ringing and chasing them. So investing in property, in houses, brings you that steady income. It doesn't fluctuate. When the tenant moves in, they pay you rent every single month. So you don't have to worry about it going up and down. The second reason why buying houses for a profit is that we have something that we call capital appreciation. The value of the properties in the UK tend to go up over time. In average, property prices goes up between 8 to 15% a year in the past 80 years. Let me give an example. Suppose you bought a property, let's say last year, for £100,000. Fast forward to today, suppose you want to remortgage that property now, that property would have gone up at least 10%. Of course, if you know what you're doing and if you bought the property at the right location. So 10% of £100,000, that is £10,000 you would have accumulated in only capital appreciation, and plus the rent you would have made as well. Suppose then, fast forward to 2 years from now. So you got your first year, now is the second year, and property price went up 10% each year. So you would have made £10,000 in the first year, and you would have made £11,000 from the second year. That would have been a capital appreciation of £21,000. If you've been renting that property as well every single month, let's say for about £400, that property also would have generated you £9,600 in rental income. So your capital appreciation of £21,000 plus the £9,000, that would have gone £30,100. So you can use that money, you can go again buy a similar property, right? That will give you the same steady income and the same capital appreciation. You see now how property would give you profit. Number 3, tax benefit. One of the most amazing things when it comes to investing in property. So if you buy a property, it gives you tax benefit. It gives you tax write-off. I'll give an example. Suppose you bought those property, the 2 properties, the 1 property I've just told you about, right? And you bought that property under company name, let's say XYZ Limited. You'll be able to deduct so many costs of it, tax deductible cost. One would be your mortgage interest payment, the interest payment you pay to buy that property when the bank lend you the 75%. In essence, when the bank lend you the £75,000 to buy that property. So any interest you would have paid would have been taxed deductible. Next, you've got your expenses. For example, your repair and maintenance can be deducted. Your insurance can be deducted. Suppose you educate in yourself in properties, knowing how to invest in properties. That's also tax deductible because it's personal expense. Suppose you're traveling for a one-to-one session with me, for example, you can also deduct that from your property investment expenses. So you can see how you can take benefit in investing in property whilst you make handsome profit along the way. Number 4, inflation. Inflation is one of the best reasons why I love investing in property. It really, literally gives me goosebumps. I'll give an example why it is amazing to invest in property to hedge against inflation. So let's take an example. Say £100,000 property, okay? The beauty of having that property, remember I told you the steady income, the rental income. So what happens basically, as inflation goes up, your rent also go up in parallel, right? That is if you know what you're doing. Suppose you've got a tenant there for a year and in your contract, it's an annual basis. So you can increase your rent every single year by incorporating that in your contract by saying I'll be increasing rent every year. So what you do, you then set it in a way that you increase it based on the base inflation rate plus anything on top of that. So guess what? Your rental income is going up. That's one way of hedging against inflation. So the rent is always parallel to whatever the inflation rate is. Amazing investment strategy, right? Next, as inflation goes up, guess what? 2 things happen. The first thing that happens, the debt you have on that property goes down in value. Suppose you got a mortgage of £75,000. That £75,000 goes down in value. How? You may be thinking. The £75,000 you used to buy that property a couple of years ago, maybe 3 years ago, will not buy the same property as a deposit. Remember, your property would have gone up by 10% twice. Okay, that property would have worth £121,000. So if you had to buy the same property, the £75,000 wouldn't have been enough to put down as a mortgage because the bank would be only able to lend you 75% of the £121,000, not the £100,000. Now you see, and in a basic analogy, look at the milk that you buy at home. The price you buy for that milk today isn't the same price you bought it maybe last year. Last year, milk were going for 50-65 pence, and today you're not going to touch a jug of milk for less than £1. So it has gone up significantly, gone up by 25%. So meaning the value of your money would have gone down. So that's what happened when you got a mortgage. The value of a mortgage would be going down, opposite direction to inflation. And guess what? The other benefit you get, the property price also goes up based on inflation. So whilst the debt goes down, the property value goes up. Is that making sense? So again, that's the advantage you get for investing in properties by inflation, hedging against inflation to ensure your investment property is making you money whilst you sleep. So the 3 benefits: the rent increases as inflation increases, the debt, your mortgage, decreases in value as inflation increases, it goes the opposite. And guess what? Your property price goes up as inflation goes up. Isn't that beautiful? Perhaps that could be a reason why today may be one of the days you can make a decision to start investing in property instead of waiting for it or procrastinating about it. Number 5, leverage is one of my favorite. You can leverage in property investment. You can take control of properties that worth millions and millions and millions of pounds with tiny bit of initial investment. In some occasions, no investment at all. Let's start from the one that requires a little bit of investment. Suppose you want to buy a £100,000 property. Literally, you don't need the whole £100,000 if you remember what I've just said. So the bank will lend you 75% of the £100,000 and you would then put down the 25%, which would have been the £25,000. That's it. And then you take over and control a £100,000 property. That's one massive, massive advantage of leveraging in property. Suppose you don't even have the £25,000. You can raise that £25,000 from investors, family and friends and people that have got money that are really struggling to do something with it. So you can use their money, take it off them and literally invest in property. That's number 1 leverage of buying properties or investing in property. The other leverage you can do, instead of buying the property, now you can agree to buy the property at at today's price for some time in the future. That's what we call purchase lease option. That's a massive benefit. That's a massive benefit. You can take over £1 million property, £2 million property without putting any of your own money down. That's another benefit. The other benefit also, one of the other leverages investing in property is acquiring a property without buying it, right? Instead of buying it, you rent it. You rent the property and you subsequently rent it out to other people. Again, you do not need £25,000. You don't need 15,000. You don't need £10,000. You only need a 1 month rent and a deposit you normally would need to rent a normal house. So instead of living in that house, you use it and rent it out in a way that it makes you passive recurring income. Isn't that beauty? Of course it is. Number 6, diversification. You see, diversification in real estate is one of the best ways to make serious return on your investment. You may be thinking, how do you diversify in property investment? One way of diversifying from property investment, you start buying houses and rent it to family. So once you know what you're doing in that strategy, you move on to another strategy called HMO, house in multiple occupation. So what you do, you buy a property, usually a dilapidated house, you renovate that property, add some rooms in it to make it 4, 5, or maybe 6 bedroom. Instead of renting that house to a family, you rent it to individual people. You rent it room by room basis, and then that also gives you better and higher return on your investment while generating handsome profit. Alternatively, you can buy a building, convert it to commercial unit, do the whole building as a shop or as a warehouse. Could be another diversification. Perhaps you're going to do a mixed use property. Downstairs become a shop and you've got your flats upstairs. So these are the way you can diversify to make a lot more profit in your investment portfolio. I really hope this video has been helpful. This video has been helpful. Smash the like button below, subscribe to my channel for more amazing videos. I look forward to sharing next video. Thank you.